Hey guys, how you doing? It's the Intuitive Investor from StockTwits. So I wanted to talk about very briefly, just touch on some points about the market conditions. Today is October 23rd, the morning right before the opening bell. And as you can see, there's anticipated opening to be in the red across the board with Dow, S&P, and the NASDAQ. I've been watching Squawk Box and Squawk Alley and Squawk Street or whatever hell all those shows are called. And I'm torn between what they're reporting and what I'm seeing in the markets. Everyone, for the most part, is calling it a blip in the screen, a mild market correction. But what I see is a little bit different. I see a market sell-off, and we have to really define what would quantify a market sell-off versus, and then there's bearish, and then there's correction, and then there's a crash. All these things that I'm probably not going to spend too much time talking about because I have about 5 other points that I want to make. A couple weeks ago, they had an analyst on there who discussed something about a stealth correction, and a stealth correction, I think, in my opinion, would be a little bit more deadly to investors because it's not something that goes from night and day where it's clear as crystal. It's something that actually gradually happens over time, where it happens so quietly and so nonchalantly that some people could regard it as a minor correction, but it's really trending south over a period of months. And so when I heard that term, then it really alerted me to, I think, a potential pattern that we're seeing if you were to look at the 1 year performance for all the indices. The other thing that concerned me is that we're now into third quarter earnings territory, and I've seen a few companies that have already started to lower their guidance across the board, across the different industries, and to me that's something that we should really be watching out for, because this is not a technology specific sell-off or an industrial specific sell-off. This is literally getting everybody. So there's no winners in this. Maybe people that are shorting or the people that are investing in the VIX, yeah, they're probably winning. So this reminds me of something that I've seen in the field of psychology, where it's no longer enough. And in working with families and couples, there's this phenomenon that happens where no matter what you do, it's not enough. And I remember when the market was beginning to recover, where when companies were able to demonstrate that their guidance was improving and their losses were decreasing, then that was enough to bump the stock. And then investors became desensitized, and then it became a question about, did they meet? And if they met, then that was enough, and that kept investors satisfied. And then that became not enough. And then it was about, did they beat expectations? And when they beat, that was enough to satisfy investors. And finally, I think we're reaching a very crucial point in guidance and in earnings where a company now has to beat and has to increase their guidance in order to see a jump in the stock, which to me is unsustainable. And it's unsustainable in life. It's unsustainable in relationships. It's unsustainable in nature, where it's a more. And I think that that's what I'm seeing. In some of the earnings release that I saw from past week and a couple of weeks ago, it was very hard to tell, but it looked to me like there were companies that had actually met or exceeded their expectations but still went down. Yet there was one company, I don't remember the name, but if you look on the NASDAQ earnings reports, there was another company who had actually missed, but was still up on numbers a week after. So I think that investors are exhausted. I think we're entering not enough territory. Again, that's more of a psychological phenomenon that I see. But I view stocks the same way that I would evaluate a family or a system, that is. And so the last thing that I wanted to talk about are the certain catalysts, the certain things that are happening in the market and in the world right now that I think put us at risk of an immediate correction. Forget the stealth correction. We're talking about an immediate correction, an immediate crash. And this is the part that kind of makes me nervous. So let's just get it out there. The political climate here in the States is really shitty. Democrats and Republicans do not like each other in general. And with the midterms coming up, I think we're in a can't-win scenario where you're damned if you do and you're damned if you don't. Where if Democrats take control, then the Republicans will argue then that we're gonna crash the market, or we're gonna destroy the market. Or if the Republicans maintain control, then it's about how the Republicans are going to continue giving tax cuts to the rich, or whatever political rhetoric that's been going on, where the richer get richer and the poor get poorer. And that's been a common fight. It's not about what's happening now, but that's just been a political dogfight for ages. Frankly, I don't even understand why political parties exist. I thought it was George Washington a long time ago who had said, let's not have them, but here we are. The trade war, that's another big thing that's been going on lately. It's been going on for months. There's no end in sight. We tag them, they tag us. I don't disagree that we don't need to level the playing field, but it's in the manner in which we approached it. Like, you don't punch first and then later try to negotiate a deal. You go in trying to negotiate a deal. So that's going to hell. Obviously, it's impacted Asian markets, and it's beginning to impact us because of the retaliation. So there's no way around it. That's also playing in the mist. 10-year has gone up. Then there's this issue with the feds being too aggressive. That's another thing. And then again, just to repeat, the lowered guidance that companies have been giving us for the remainder of the year. To me, all of those are interesting catalysts. I think, to me, the biggest one there is the midterm election. A part of me feels that regardless of what happens, whether the Dems take control or whether the Republicans retain, control, either side is going to use that as a catalyst for another market sell-off, or another market correction, or another market crash, or whatever you want to call it. But to me, when I see people being overly bullish on the news about how this is a buying opportunity, well, if you would have bought last week when they told you it was a buying opportunity, then you would have saw all your earnings, all your whatever wiped off, because we had another correction that still in this moment as I speak is still happening. So no one can predict what's going to happen. I can't, no one can. All we have is our best guess, our intuition. And so some people are going to get it right, and some people are going to get it wrong. And that's going to include amateurs and professionals. There's just no other way of saying that. But what you can do is analyze the political climate, the economic climate, and just everything, the psychology of the market. And for me, it just doesn't seem healthy. I revert back to the not enough phenomenon that I've seen in relationships and family systems. And the market and investors as a whole, Wall Street sentiment is no different. So good luck. Be smart. Do your due diligence. And once again, please subscribe to my videos. And if you aren't following me, I am the Intuitive Investor from